Stocks jumping today after the Federal Reserve approved the largest interest rate increase since 1994. The Dow was up 303, the Nasdaq gained 270, and the S&P 500 added 54. Credit card debt, if you have credit card debt, that is, now is the time to pay it down. Looking to take out a loan, it's going to cost you more.
And that is because the Federal Reserve has raised a key interest rate in an effort to slow down inflation, the biggest hike in nearly 3 decades. But why is this happening, and what are the experts saying about it? 12 News reporter Chelsea Jones is breaking it all down and how this affects you. Chelsea?
The role of the Fed is twofold. Its first goal is to reach maximum employment, and the second is to keep prices stable, and that's where we're seeing problems. That's also why all of us are feeling a strain on our wallets. Everyone is paying more for everything. The Federal Reserve is hoping to ease that pain, but not before Americans have to cough up a little more money. Wednesday, Federal Reserve Chairman Jerome Powell announced a 3/4 point interest rate increase.
We at the Fed understand the hardship that high inflation is causing. We're strongly committed to bringing inflation back down, and we're moving expeditiously to do so.
He says ultimately the goal is to get inflation down to 2%. It currently sits at 8%. And while the hike is the largest in recent years,
The rates were very, very low for quite a while because of the pandemic and the need to do everything we could to support the economy.
so what does that mean for you?
Well, if you're a borrower, this could be bad news. If you have a credit card balance, it's going to cost more to service that debt. If you're going out and buying a new car with a car loan, it's going to be more expensive.
Though right now it's too early to call just how much more expensive, the idea is that the raising of the interest rates will shock the economy enough so that people will spend less money, the demand will then go down, and inflation will fall.
Historically, when you're going to try to combat inflation, you have to make money more expensive.
On average, Americans are spending roughly $350 more a month than they were at this time last year. Chairman Jerome Powell says interest rates may have to rise even more by the end of the year. So experts say pay down your credit card. Consider putting your money in a local bank versus a big bank because you may get a better interest rate, which could put more money in your wallet over time. In the studio, I'm Chelsea Jones, 12 News.